Hi everyone, this is Paul Fouché, Chief Investment Officer at New Road Capital, giving you your November market update. So a positive month for markets in general with asset classes, but slightly more mixed in terms of the breakdown. If you look at local equities, about 1.7% up, so a very good month for local equities. But global equities a little bit more mixed, with developed market equities up about 0.3%, but emerging market equities down about 2.4% for the month. So a bit of a risk-off month for emerging market equities. Also, a little bit of a risk-off month for your more sort of aggressive type equity exposures, which we think is actually healthy. You've had a very strong bull market for the last few months, and it's good to get a little bit of a shakeout in the market, get some of that sort of hotter money out of the market. And move out. But really, all in all, so you saw during the middle of the month a little bit of a sell-off, but then you saw a very strong recovery towards the end of the month, with good economic numbers coming out, but also good earnings numbers from the US. So we think all in all, a little bit more of a volatile month, but we think positive. We're actually quite happy with that. We think a little bit of a shakeout every now and again is healthy for any bull market. So we're still very focused. Still think that we've got a strong, intact bull market, but good to have a little bit of a consolidation month. But all in all, still a really good month. So if you look at earnings, as I mentioned, coming out of the US, very strong earnings numbers, particularly driven by, believe it or not, the industrial sector of the market. So that's where you've got manufacturing and production. So it seems like, you know, some of the moves by Trump in terms of the tax savings as well as the tariffs are definitely working in terms of the industrial sector of the market, if you just purely look at the empirical data. So if you look at the valuations of the US market over the last month, come down quite substantially as those earnings numbers have come through so strongly. So we still, as you know, still very, very bullish on US equities, and we like that space. And yeah, really, really looking to hopefully see a little bit of a Christmas rally in the markets coming into the new year. If we look at inflation in the US, it's sitting at about 3%. That's core inflation as well as headline inflation. So still above that 2% target, but we still think very much in control. And you've seen the Fed dropping rates now, and we expect that you'll still get another cut before the end of the year. So that's quite positive for the markets. Food and energy prices still very much under control, and energy very much under control. Energy sitting on the West Texas index at under $60 a barrel, which is fairly low. If we look at South African inflation, so core inflation came out at 3.1%, slightly lower than the month before. Headline inflation raised slightly at 3.6%, but still really not a concern on the local market. And you actually saw the MPC dropping rates by another 25 basis points this month. So we still think very, very strongly still in a cutting cycle in terms of rates, which is always supportive of equity markets as well as bonds. The exchange rate for the month, Rand dollar, started at about 17.30 and ended at about 17.10. So you can see that existing sort of strengthening Rand against the dollar, very healthy. The dollar did hold up quite nicely against its developed market peers, but really it was a strong Rand. So that's indicative of another sort of risk on month for the Rand, which is good to see. If we look at the yield spread, still about 4.5% against the 10-year. So that's the SA-US 10-year yield spread. So still very healthy. And actually, if you look on the back of that, the Orbi, the local bonds, government bonds for the month, did about just over 3.7, just over 3.1% for the month. Which is a fantastic return for bonds. And as you know, we've liked bonds for a long time, and we still, even at these values, still think there's value in the bond market. So really happy to still hold our bonds, and it's done very well for us, that holding in our portfolios, and we expect it to continue. So obviously with that, the yield curve coming down, your longer rates are sitting at about 9.5%, between 9 and 9.5% at the moment. But still, we think very bullish, considering inflation sitting at 3.6. And if you consider the new inflation target of the MPC sitting at 3%, that should be quite bullish for bonds in the near to long term future. Developed market bonds, the G7 was fairly flat for the month, up slightly at 12 basis points. And then US Treasuries on the longer end actually up about 25 basis points for the month. So all in all, a decent month for markets. A little bit more mixed, not as indiscriminately up as we've had in the last few months. But as I say, I think that's actually a good thing. It's a healthy part of a bull market to have these little consolidation periods. And as I said, earnings coming out very strong, and we're still very bullish. This is our last update for the year. We will be in touch again in January or the end of January for the January update, but we'll give December a skip as we're all away. We will obviously be watching the markets very closely, but we wish you all the best. We hope you have a wonderful festive season, and we will see you in February for the January update. All the best. Bye.